everybody.
We're back.
Yay! After a vacation.
Yes.
We didn't get burned.
Hey, we did not. Okay, I'm Sean,
Kelly.
and this is this week's market report. So this week, what is our...
How do you buy a house if you have to sell a house?
That's a great question.
It is a great question.
So this is something that a lot of people struggle with when they want to sell a home, but then they also want to buy a home. What order do you do it in? How do the logistics work? So we're going to go through just a brief synopsis of how it works, how you can do the deal, and how to make it happen. Okay, so what's the first thing you have to do?
First, you want to talk to your lender.
Why?
Ask them, do I have to sell this house in order to buy another one? I mean, it's not like you have to have a ton of cash in the bank all the time, every time, to be able to buy a house without selling yours first.
So basically, that comes down to the DTI. If you are going to take a loan on the second house, can you carry the expense of the first house while you have the second house? If you can, you got some options. So what would the first option would that be?
Well, you were supposed to go first.
So the first option would be
talk about a bridge loan.
Bridge loan, that was it? Okay.
Yeah, go with
So the first option is a bridge loan. And basically what a bridge loan is where you in the long term, you want to take the equity of your house that you're selling and put that towards your property so your payment's down, right? If that's what your goal is. So a bridge loan basically gives you an advance on that equity in the house. So you would take that bridge loan, that would give you the down payment for the property, and then as soon as you sold your house, you'd pay off that bridge loan. Bridge loans are typically higher interest rate, so it's not a good long-term loan, but it's something that can help you go ahead.
Bridge.
It's a bridge.
Bridges
Help you bridge that gap. So that's option number one. Option number two
is buy the home and then sell yours.
Okay.
Right? So if you do have enough equity in your house and your lender says, yeah, we can make that happen. And in our market, we're going to sell your home and it's going to go pretty quickly.
Yeah.
So that's a very good thing.
Okay, so you just buy the house and then sell it.
Yeah.
The problem with that for some people might be that they may want to take again that equity from the first home and apply that to the second one to get that mortgage rate lower. So an option for that would be, if you don't do the bridge loan, another option would be what's called a
equity recast.
Equity recast. So let's say you have $500,000. Let's say you live in this house over here. I hope it's now.
You can be the house, and I'll be the other house.
Okay, so you live in this house here.
It's old. And
it's old.
Gray,
it's gray. You want to get out. You have $500,000 in equity. You buy that house.
Whoop, whoop.
Yep, and now you have a mortgage payment based on whatever your money that you put into it was, but it doesn't include the $500,000 because this money's still tied up in the house. So then you sell this house, and now you have this $500,000 cash.
Give me that money.
Yeah, so you pour that into this loan over here, this debt.
And your lender, I'm super debt.
Yeah.
And your lender, depending on who they are, that's why you have to talk to your lender, because not everyone does it. They can recast the loan, and now your interest rate won't change, your term won't change, everything pretty much stays the same, except it goes to.
Yeah, so it goes to the principal. So now your principal just went down by $500,000. So they recast those payments based on that new principal amount. So it'll take your payment and lower
legit.
it.
I love that.
But again, all lenders don't do this. You have to ask them specifically about it. So we can help you find a lender that would do that for you. Okay, so those are the three options if you can afford to go ahead and buy the house.
Now, if your lender says, yeah, you do need to sell your house before you buy yours, which is very, very normal.
Yeah, you don't have to stop.
Yeah, it's not a sad thing.
Yes, but we can make it happen. Okay, what's the first thing we can do?
Sell your house and get a PSO, which is a post-settlement occupancy. A lot of people call it a rent back, seller rent back, right? This is so cool. And in this market, because buyers are starving for your house, they are going to give it to you usually for free. Yeah. And maybe just a security deposit that's going to be held by the title company that you get back once you leave. And you can do that for up to 60 days, assuming the buyer has a loan.
Yeah, so lenders require that they take property within 60 days. If it's a cash buyer, they can go longer. We actually just won a property for our buyer because they were a cash buyer and they were able to offer a couple extra weeks.
The sellers actually needed to stay in their house because they had to buy a new one and all this. So we were able to offer 75 days, and I think that was
person. And this is an exact example of that. So what happened was we're closing on the house. The sellers are getting all the money. The The new buyer is now the owner of the home, but the seller, you, gets to stay in the house for 60 days rent-free while you go and try to find your house. Okay?
Yeah.
If you don't find a house in that 60 days, you always have the third option, which is a term rental.
A short-term rental.
Yeah. So there's always that option. And you could do that from the beginning as well, but getting that PSO would save you that short-term rental
Saves
expense.
you from storing your stuff,
Yeah.
you know, in the
Moving
interim
twice and all that.
Yeah, if you have a big family, that's a huge headache.
Yep. Yep.
Unless you're me, I totally own that stuff, man.
That's right.
Okay, lastly, we have.
I put that on there even though it doesn't work in this market.
We're not
So
going to talk about this. I don't like it.
we have to, because it's an option. If we don't say it, they're going to be like, you didn't say this.
You didn't say it.
So
well, there's a lot
one,
that they-
that's true. So one option is that you could put an offer in on a home with what's called a home sale contingency, which basically means that your offer is contingent on the sale of your home. No seller is going to take that. We have had one of those go through in the last 4 years, and that was because the property was already under contract when they put the offer in, and they gave a really, really strong offer. So the home they were selling was already under contract. Our client was the seller, and we had a closing date that was safe and secure, and they put that in with that contingency.
Right.
But for the most part,
and the house they had to sell was like, I mean, if you're in certain areas, then you know.
yeah, they didn't have the pickup buyers.
And we did stipulate, like, you can't try to overprice your home. It had to be within a
Yeah.
certain. So there are all these things that you have to put in there
Yeah.
to even have a shot at it. But
Yeah. So if you do want to try that, you have to look at properties that have been on the market for a while, and you're looking for sellers that are open to options at that point. But for the most part, you cannot put an offer in with that contingency. But it is something that in a normal market would be a consideration.
true that, home slice.
Okay, so that's it. Those are your options. That's how you can have a house to sell and want to buy a house, and those are the ways that you can make it work. If you have any questions about this, we can talk with you specifically about your condition, your situation, and to help you
I'm suffering from a want a house and a need a
figure out the
house
best
condition.
strategy possible.